This is Alan Farley from FX Empire. Let's look at this week's top stocks, ETFs, and cryptos to watch. First up is Facebook, which reports earnings on Monday night. I think we'll look at a daily chart first. As you can see, the stock sold off about 16%, coming down to the 200-day moving average at the start of October. Now, this is also about an 18 or 19-month trend line right here, so this is critical price action. Now, it undercut the 200-day and took off about 25 points up into the middle last week when it gapped down once again into Friday's close after Snap reported a revenue shortfall due to iPhone's new ad tracking blocker technologies. So investors will be listening very closely to the impact on the new iOS system on Facebook revenue and whether or not they warrant. Now, if investors are not impressed, we could get a breakdown of the 200-day moving average. And it's been a long time since the stock was below the 200-day moving average. I mean, going back here, you really have to go back all the way to the pandemic. And if we do get that breakdown, we could very easily get down to the 270s to 290s in coming months. Now, General Motors also reports earnings next week. It had a this week. It had a very good year in 2020. Finally breaking out, I think this was the prior resistance line, this red line here, and coming back up to an all-time high in the mid-60s in June. It then sold off very rapidly and very intensely down to the mid to upper 40s due to supply chain disruptions in the United States and in other parts of the world. And then we got this recovery rally, which covered about 2/3 of the distance back to this prior high. Now we've settled into this holding pattern for a couple of weeks ahead of the report because everybody wants to know if supply chain issues are still weighing on revenues and whether or not idle factories or factories that have been idled temporarily will be idled once again. Now, Chevron reports earnings next week and may not be at the top of anybody's radar, but it's definitely something to watch. If you take a look back, Chevron hit the 130s back in 2018, then sold off to almost $50 during the pandemic. It's recovered in two waves, and it looks like we may have started a third wave here, coming back up to this resistance level around 113. Now, of course, crude oil has just skyrocketed recently. It's in the 80s now, WTI crude, and can very easily get over $100 in coming months because the math between the replacement of fossil fuels and the introduction of alternative energy just doesn't work. It's going to take years for alternative energies to take control, and so the value of crude oil is rising very, very rapidly. In turn, Chevron and other integrated oil companies could very easily break out to all-time highs in 2022 or 2023. Okay, let's take a look at Bitcoin, which had a very interesting reversal week last week. As you can see, we have on the daily chart, the prior all-time high was about 65,000, sold off to the 20s, started to recover. Now it came back down to about the 40,000 level in September and took off in a straight line back up to the prior high, completing the prior, which is resistance, broke out for one day and turned tail. Now, if you take a look on the weekly chart, you will see that Bitcoin posted this bearish shooting star candlestick, and that indicates that we're going to get several weeks of lower prices at least. However, the weekly stochastic is still pointed higher, so it may limit downside, and we may just get a lot of two-sided noise going in here before Bitcoin takes another shot at breaking out or enters a steeper correction. Now, finally, let's take a look at the Russell 2000 ETF. And it had a very good year in 2020. Look at that. From the low, it rose over $100 and coming up to an all-time high in March of 2020, entering this pattern, which is either a symmetrical pattern or ascending triangle pattern, no matter how you want to look at it. But at the end of a very long rally, the pattern is actually called I think it's called a pennant on a flagpole or a flag on a flagpole. And it's very bullish for a measured move. In other words, a rally that's the size of this rally from sort of the low of this pattern, which could be just about here. So that would actually take the small cap ETF well above $300. Now, the good news here is that small cap seasonality flips to highly positive starting November, and that positive seasonality lasts all the way through March of next year.